Heading into April means we wrap up the first quarter. The Korean economy's performance in the first 3 months of 2013 can be a key indicator for the entire year. So, how did the economy fare? Our Song Ji-sun goes over the market consensus for the first quarter and gives us the outlook for the next 3 months.
The Korean economy is growing at a slower and slower pace, logging 1% range growth in the second half last year compared to a year earlier. The Korean economy is expected to expand at even a slower pace in the first quarter this year, but may bounce back in the second quarter. Securities firms have predicted a growth rate of between 1.6 to 2.2% year-on-year for the first quarter, with an average of 2.1% growth for the first half. Yet even though the economy is expected to catch up in the second quarter, there are some variables to consider. One of the biggest issues has been the weak yen, strong won trend that kicked in the latter half of last year. In 2012, the won strengthened by 6.1% against the greenback, while the yen weakened by 17.2% against the dollar. This trend hurts Korean exports, especially in the automobile and electronics sectors.
If the won strengthens to 1,001 against the US dollar and the yen weakens to 100 yen against the dollar, Korea's economic growth shrinks by 1.8 percentage points. The weak yen, strong won trend is also reflected in the stock markets of both countries. Japan's Nikkei 225 rose by nearly 40% over the past 6 months, while Korea's benchmark Kospi edged down in the same period.
But experts say the effects of the weak yen, strong won trend won't be as destructive this year as last year, when rapid changes in the yen-won exchange rate took place in a very short period of time.
Exchange rate fluctuations over a very short period of time are the most difficult to counter. The yen weakened over 20% against the won in just 5 months between September and January, from 1,400 won per yen to 1,100 won, and has since remained little changed. But the rate is expected to be less volatile this year, and the government and exporters will prepare measures to counter the weak yen trend.
Another factor that could kick in the second quarter is the rate cut. Korea's central bank froze its key interest rate at 2.75% for a 5th consecutive month in March. But market analysts think that the Monetary Policy Committee could lower the benchmark rate as early as next month to boost the flagging economy. The new finance minister Hyun Ho-seok said he would use all possible measures to speed the economic recovery, adding that interest rate decisions are part of the government's policy package.
If the economy doesn't recover at the anticipated pace, the Bank of Korea could slash the interest rate next month. This sends a strong signal that it's carrying out the administration's policies.
Song Ji-sun, Arirang News.